Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is my partner in crime, Chris Dearborn, is the Managing Director of the Nasdaq Markets Intelligence Desk, and we're bringing you the weekly wrap in the markets. Chris, thank you very much for joining me at MarketSite today. And you know what? Markets struggled to find direction earlier in the week, but it looks as if they're finding it to the downside now. What do you think everyone's focused on?
Well, Jill, again, thanks for having me on. I love doing the show. It's really been a lot of macro we thought would be here, but what's really moving the markets is the tweets out of Washington. And again, oil's been a big factor here for the week. It's been touching near all-time highs, three-year highs, and selling off a little bit here today. It's kind of pulling the markets around with them. Fears of a trade war still resurfacing. There's a lot of rhetoric coming out of Washington on that, and also coming out of China. So you've got such large encapsulating items that are really kind of pressing the markets down a little bit here.
Well, let's talk about earnings because it seems a little bit counterintuitive. Many companies have beat analyst estimates pretty significantly, but you're seeing this in the financial and the tech space, where it seems as if market participants are concerned that it could be late stage cycle and what's going to happen going down the road.
Right. So the quarters have been excellent. You've had a small sampling of companies report so far this year. The S&P 500, we've had just over 80 companies report so far to date, and they've had significant upside beats here. You've had an upside beat of over 7% from the 87 companies that have reported so far. You've had a growth rate that popped over 25% on the earnings side. So that's excellent. What's going to be the catalyst here is what really are they saying on their calls, right? The quarter, when you report earnings, tells you how well they've done and whether they beat their expectations from the covering analysts or not. But really, what is management saying? What's the tone of the conversation? And what are they doing looking forward? We already had upside expectations coming into this quarter, especially with the tax cut that we had being implemented at the beginning of the year. And the question was how the company's going to use that money. So now we're getting a look into how they are going to use that money and where the companies are going for the rest of the guidance for the year.
And it's really interesting that you say that because that was the catalyst for 2017 was tax cuts on the horizon. They're here now, and they're being baked in. So what's going to happen beyond that in terms of growth within the individual sectors? But I want to go back to crude oil, and it was really interesting because yesterday on Thursday, it was trading at three-year highs. Then just this morning, Trump came out with his tweet saying, and I have it right here, it's really interesting. It looks like OPEC is at it again with record amounts of oil all over the place, including the fully loaded ships at sea. Oil prices are artificially high, no good, and will not be accepted. Now, would you agree on that, or do you think that we have to look beyond that with the Iran deal that's coming up May 12th? You also have OPEC in June.
There's no limit to what will be coming out of the White House on any given day.
Right.
It was a random text, really, that brought the whole random tweet that brought the whole thing out. I really wasn't looking forward to that, but it really impacted the markets as a whole. Oil has been a driver here, as we said before. The commodity space has been doing very, very well, and the stocks have been acting in kind, especially the drillers who go along with it. So what you're looking at here is that going to be a stalling method for other negotiating tactics, or will it have an impact for the future? Remember, you have a number of large E&P names we're reporting next week, two of the largest in the Dow, Exxon and Mobil. Will this have an impact on that? We'll have to wait and see.
All right, and to wrap it up, let's take a look at the trading week ahead. We have GDP on Friday, but I think the bigger impact is going to be the amount of earnings. I think it's actually the heaviest week of earnings for Q1, and we have our big heavyweights, Google, Amazon, Microsoft, and Starbucks coming out. So this really is the sweet spot of earnings.
It really is. It's going to be a very, very busy week on Wall Street. You're going to be able to capture your alpha next week and see how well the companies have done and how well they're going to. You have 734 companies reporting next week, of which you have 180 members of the S&P 500, 12 members of the Dow, and those are the heavyweights. So when you talk about the market, remember the Dow is a price-weighted index. So the biggest member by weighting of the Dow is going to report earnings next week, and that's Boeing.
Right. So you guys are going to be busy on the intelligence desk this week.
We are going to be swamped next week with earnings. People, we're talking about what's going on in their stock, looking how the reactions are, what are the analysts saying, and investors' sentiment to what is said on their calls.
It's amazing how many companies guys coverage. Kudos to you. Well, anyway, our conversation should be interesting next week following all those reports.
Absolutely.
Thank you very much for joining me for the Markets Weekly Wrap. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.